The future belongs to those who dare, those who will do extra. Hi, I'm Mark Croskery. Welcome to Business Live Extra, the program that looks beyond dollars and cents to the movers and shakers in business and the capital markets. Today's guest has over 20 years of experience in the fuel trade. He has played many roles of dealer and managing director prior to his engagement at this company. He holds a Master of Business Administration from the Mona School of Business, University of West Indies, UWE, and a Bachelor of Business Administration in Finance from the Zicklin School of Business, Baruch College in New York City, USA, where he graduated summa cum laude. He was a recipient of the Irvine Fromme Academic Scholarship from International Finance. He's a former CFO and COO of Marathon Insurance Brokers and Federal Capital Group Limited. Joining us today is Jeremy Barnes, Director and CEO of FESCO. Jeremy, welcome to Business Live Extra.
Thanks for having me.
Great having you, man.
Sure.
Yeah. Well, with where oil prices are now and everything, it's great having you on BLE to talk about it.
Okay, thanks.
How's it been since going public? Getting FESCO on the stock exchange. Still what, about a year now, or just over a year?
Just over a year. We listed in April 2021 as last year. So it's about, give or take, 15, 16 months.
Yeah. And how, you're managing director, you're in charge of the business, we can just even say CEO.
Right.
But, how has it been? Because, FESCO has just taken the market by storm in the sense that, we always like to say on Business Live Extra or BLE that there's a few darlings of the market. We've seen it with Fosrich, we've seen it with a couple of companies that just seem to, whether it's the brand or, the face of the company, in your case, that's you, or the investor relations,
right.
Just the market just loves the company.
Yeah.
And FESCO is one of those businesses. What do you attribute this to?
First of all, we're very grateful for that. I do believe that the value proposition that FESCO has is attractive. I think for our new stations that we opened, Ferry, Beechwood Avenue, they are very, very attractive stations. We believe that the brand in itself, we took a lot of pride in establishing the brand and, even the fonts that we use. I think what we do at FESCO, we take a lot of time in doing everything that we do. So, even when we're planning to build a station, we take, a station takes typically 3 years to build. Mm-hmm. From the beginning, from the concept, 3 years hence. So when you're doing it, what you have to do is you have to plan 3 years in advance of what people would want.
Okay.
And again, you want that business to exist for 10, 15, 20, 30 years. So you have to plan again for another 10, 20,
really?
30 years. So you don't just look at a station how it is built now. You look at a station how you think it needs to be 10, yes. 15, 20 years. And you have to make that plan within 3 years. So we think a lot about what we're doing. We plan a lot. We use a lot of technology. I think our customers appreciate that. I think that they really appreciate the value proposition of our FESCO station. I think the price point at which we hit the market and also all the attributes of a FESCO station makes it a very attractive.
So Jeremy, we see a lot on, social media, Twitter, that, the Beechwood Avenue station really is offering probably better prices in the market. Mm-hmm. And, just curious on Business Live Extra, is it due to, some math behind it, or, post-IPO, you've had some new stations. Right. Is it due to you're able to buy more volumes and just give the consumer a better price now as FESCO is a bigger company?
Okay, so for every gas station, there is a metric for it. And the metric for our business is, volume and margin. You have to build a station. If you want volume, you have to build a station that can be able to accept the volume that you have. Typically, if you look back, stations that were built 40 years ago, some of them are actually in the road, almost in the road, because they had, horse and buggy. They were built like 60, 70 years ago. So they're pretty close to the road and they only have 2 pumps. Now, a station like that can't necessarily do a lot of volume. So you'll find that the value proposition that that station has to do is that they have to increase the margin but give better customer service.
Okay.
At Beechwood Avenue, we do both. We're able to have a great amount of throughput because of the way we position the dispensers throughout the station, and we're able to give good
when
customer service.
Dispensers mean just the pumps? The pumps, okay.
Right. So our pumps at Beechwood Avenue, for example, is what I call a starter gate position. So it's like on the starting block. Everybody's familiar when, all athletes line up at the 100 meter. Everybody's in the same position.
Got you.
So at that station, you don't have to maneuver another car once you finish dispensing to come out of the station. So that's the most efficient setup. So again, for us, we target smaller margins, so the customers love that. Everybody wants to pay less for fuel, and we.
And Jeremy, how many stations are you at as at today?
As at today, 17. So last year when we went.
17 island-wide.
17 island-wide. We've added 2 in the last financial year, and we just added 1 about a month ago.
Is the latest one the one on Mandela Highway?
No, the latest one is, Mandela was added late July last year. Beechwood was added about November.
Okay.
And we added Whitehall, St. Elizabeth about a month ago.
Okay.
Yeah.
And what is your kind of, you've mentioned kind of in your, one of the recent fundraising, you want to expand the gas network more. I mean, how many more would you say, if you can say, you're trying to add before the end of this fiscal year? I mean, your fiscal year ends March or so, but how many more are you trying to add to the 17?
I can't, okay, so logistics is what it is. You try and you hope for stuff within a certain period. So
when you say logistics, meaning like say NEPA
everything,
approvals or regulatory approvals?
Yeah, regulatory approvals, all of those approvals are part of the problem, but are part of the challenge. But even bigger than that, for me to get replacement parts for pumps.
Oh, with what's happening with the whole shipping industry and global? Okay.
Right, so what usually take about 3 weeks, now take 6 months. Because the suppliers don't have it and then I have to ship it. So, making plans is a challenge nowadays.
What's your best case scenario?
Best case scenario, maybe 2 for the remainder of the financial year, maybe 2. But I don't want to promise and overpromise and under-deliver.
Yes.
But we do have stations in the pipeline to, I'd say for the next 36 months, 3-4 stations at minimum.
Got you. And of course, we see your logo today, and I think it's one of the big things that the shareholders love about the company too. I mean, it's a great, logo and branding. I mean, it represents, future energy source. I mean, it represents the legal name. But how did the company? We haven't really seen, analysts in the market ask that question, I guess, a lot. But how did the whole name come about? The acronym and all the colors that you have and that have gone into it, and also whatever those things are.
Right. So okay, good question, excellent question. That happened before I joined as managing director. But the 5 founding directors, including my father, Trevor Barnes, and the founding directors are Trevor Heaven, Hugh Core, Errol McGaw, Trevor Barnes, and Junior Williams.
And your dad is still involved. He's still a director.
He's still a director, and I mentioned all the 4 founding directors, and we have now a total of 11 directors, including myself. But in coming up with the name, they wanted to look into the future. They know that, and that's what the 3 drops actually represent. From red, which is old technology, to blue, which is
like what, a blue ocean?
And then red is old, blue is current, and green, going to green technology in fuel. So that's what those 3 drops actually represent. It took a long time in developing the aesthetic of the brand, and it took a lot of care in it. I was actually, as my father used to show me the schematics of it, what the coloring scheme was, and in trying to develop the brand, we took a lot of time and a lot of effort in doing that. And again, a lot of it was done before my time, before I officially joined the company. I think Hugh Core was lead in establishing the aesthetic of the company. So, we owe a lot to him and the rest of the directors for that. It's a very attractive brand, in my opinion, and it took time to develop this. To do it excellently, and that's another thing about FESCO. But we really try to do things excellently because we believe that Jamaicans can. So it's kind of weird sometimes when people see our brand, and I remember discussing after the IPO when people came to the Beechwood station, they were saying, who owns this company? And I was like, it's a Jamaican company.
And it seems to be something that you keep mentioning, like one of maybe the values of the company, even if it's not outlined, is you guys really take your time, you're very thorough, you're very detailed before you implement a decision at FESCO.
Correct. But people used to come and ask us, who owns this company? What type of company? I said, it's a Jamaican. And I said, no, it's French.
They just feel it's a foreign company?
They're absolutely convinced. They were like, no, who is the ultimate owner of FESCO? And I said, no, you, the shareholder. No, you don't understand. And they're telling me, I don't understand
who. They feel like things are so well executed and planned.
And they're saying that they've heard it, because people usually confuse FESCO with Fresco. And I said, no, man, it's French, right? And trust me, it's a Jamaican company. But it's something that is kind of a jab, but it's also a compliment. That
I guess that's why you have to look at it as a compliment. Glass half full.
Correct. So we look at it as a compliment that people people have seen that would take a lot of time.
Acknowledging what you're doing is good and
Correct.
good success and
Correct.
stuff. And
Correct.
consumer sentiment is the best.
Correct.
And a big up. We're going to come back to that point, Jeremy. Thank you. We take our first break on Business Live Extra. More when we return. That's good. Welcome back to Business Live Extra. FESCO's core business is the marketing and distribution of petroleum products such as E1087 octane, E1090 octane, automotive diesel oil, ultra-low sulfur diesel, and lubricants to both retail and commercial customers. FESCO distributes to retail customers through a growing network of service stations across the length and breadth of Jamaica. On the commercial side, they provide efficient, reliable bulk fuel to manufacturing, construction, and transportation industries. The company's mission is to observe the highest standards of integrity, safety, and productivity in the conduct of our business. To tell us all about the business is Jeremy Barnes, Director and CEO of FESCO. Jeremy, welcome back to BLE.
Thanks for having me.
You know, you're just touching on Beechwood and how the consumers or customers have reacted so well to it.
Yes.
Now, the head office is actually at the gas station there as well.
Yes, it is actually upstairs.
Okay, and what kind of preempted that whole strategy, that whole move, you know, by the FESCO board of directors?
Well, again, I mean, that started years ago where we're renting space.
Okay.
So we're looking for space to have our head office. And again, you have to remember, FESCO started out with $180 each investor, Jamaican. Each of the 5 founding directors invested $180 Jamaican, total of $900 Jamaican in capital.
What type of timeline was that?
That was initially, that's what the initial investment they made.
What would that would have been in the, I don't know, the 80s, the 90s?
No. FESCO is not 10 years yet. So that was about 20, that was about, yes.
So no, it's not 10 years, but and that was a interesting question I had, is that, those 5, call them founding fathers or founding investors, they each had, was it that they each had their own gas networks?
Correct. So they each had their own station. They had credit worthiness, so they could leverage themselves for FESCO's benefit.
Right.
But they started the company only $180.
The actual company, FESCO itself, what is listed today?
Each one contributed $180, in total $900 Jamaican dollars. And they used their credit worthiness and their reputation to be able to access credit. But what that meant is that the company itself had to generate revenues and profits to grow. So, from our outset, it was retained earnings that we were able to do anything. So in the company, initially, we were thinking about, building a head office, etc. Again, because you have to do it out of retained earnings, we said, hey, if we're going to do a head office, it has to be generating revenue and profits. And the obvious answer is to combine the two, have a station and have the head office upstairs. Yeah.
So that, when you really looked at it, that was not just efficiency, it actually started to save the company money.
Save the company money, allow the company to make more money, exactly. So from the get-go, FESCO is all about ROI.
Yes. Yeah. But tell me something. I mean, although each, let's say, founding investor put in X amount of share capital, but the big play, I mean, I don't know all the history of it and everything, but the big play was, as you said, each one had their credit worthiness, but each one had kind of a little network going on,
Each one had a station, so they had offtake.
And so they put this, so give us the juicy stuff on FESCO now, Jeremy. So each one kind of injected or put that network into FESCO? Is that how it worked?
Well, each one of those stations are FESCO stations. They actually you were able to have 5 stations.
Oh, so they rebranded them?
Rebranded their stations, 5 stations, right?
Okay.
FESCO. So that is a leg up.
Right.
And enable the company to generate revenues and returns quickly. And the whole investment policy flows from that.
Right.
Trying to generate.
So it was really a great story of Jamaicans actually, which happens together. So little now.
Correct.
But they really came together.
Correct. So they're not family members. They're just 5 businessmen that knew each other, either through JGRA or just socially.
So nobody had to really be like the big man, own 51%, be the chairman,
each one
the CEO.
equally owned 20% at that point in time.
Right, because when you look at that shareholder cap table, top 10 list, nobody really jumps out.
Correct.
Yeah.
So it's not common, actually, as you said, that people come together, work together, and
And it has worked out because your market cap has, blossomed, let's say,
Correct.
15, 20 billion plus or so. Your share price has done well post IPO. So by earning, let's say by owning, that 20% or so versus 50% by one, everybody
Correct.
has benefited now.
Correct. It's better to own a little piece of a big pie than an entire pie of a very small pie.
In hindsight, I guess what the market doesn't know, was there any one of those founding directors who you'd say was key in trying to, generate this idea or put this idea together or negotiate it among the parties? Or do you find it was like a little bit of everyone's idea, or was there like, a guy in a room who said, let's try and get this done?
That's before my time. But what I would say is that all five bring their strengths to the table.
Yeah.
Some participate differently than others. The value of each one of them is very important. I'd also go to say that by each one only owning 20%, I think was an excellent structure. It lends itself to actually going public and having additional shareholders, because everybody had to respect the other person's opinion. And within that respect, be able to make a decision to carry the whole group forward. And I think that has endured. We have expanded our board of directors to 11, and each one has been chosen because of their capabilities and competencies. And each one contributes, I think, a lot more than at the traditional board. They're very helpful, they're very attentive. I think we have an excellent board, and I think...
But I was going to ask you, for the size business, you do have one of the bigger boards on the JSE. Has that been, beneficial in your mind, or has it been a bit frustrating for you as a CEO, or has it been a blessing?
It's been an absolute blessing. Each one has strengths. I can rely on different ones for, opinions, being able to relay, or bounce ideas off of them. So for my experience, it's been an excellent experience. We have set up committees that allow for decision making to happen quicker. Because again, sometimes it's difficult to have 11 people meet together. So we have, established committees of 5, let's say, that are able to make quick decisions. But on the whole, I wouldn't change anything. 11 directors, they're all excellent.
And we mentioned earlier, Jeremy, some of the products that you have, right? Of course, gas is like life almost. Like you say, water is life. So, everybody knows the 87, the 90. This is some of the 93 in the market. But, what's is it just simple to say, boy, the cheapest sells the most, and you make the most money on the cheapest, or
no, it's not.
Or not? No,
no, it's not. It's absolutely not.
What's the biggest movement for FESCO?
I can tell you, I go industry-wide. If you go to Petrojam prices, Petrojam listing and ministry numbers, 90 actually sells more than 87.
Really?
Yeah.
Is that like the aspirational life?
It's not just aspirational life. It's the type of vehicles that are on the road. On the road.
A lot more like new vehicles.
But in aggregate, 90 sells more than
Do you make a better margin on a 90 than an 87, or not necessarily?
It depends on the market. Generally speaking, at FESCO, we just a slight. It's nothing to, But at the retail level, yes, they do make better margins.
I know you might not reveal it in the the quarterly numbers, and we'll get there, or the financials. But you always hear on the street that, boy, the C stores, the convenience stores, are really where these companies make their money. It's not as much the gas. Is that factual? I know it might be a little bit of private information, but is it really these FYC stores? I know that's what your brand is, where you're really making the cash?
Okay, so generally speaking, it's hard to be general. Every station has its own value proposition. So we have stations that the convenience store is separated by, what they call chicken mesh, where people sell sardine and through. So that's not a traditional convenience store. The owners have like 10 items.
So it depends on the geography.
It depends on the geography and the market that the station is in. Again, that narrative is more of a United States of America narrative. It's collecting data from abroad, where the National Association of Convenience Stores, gives out that data, and it's really the convenience store that generates the profit and revenue. For the Jamaican scenario, people generally don't spend a lot of money in convenience store because they generally don't buy a lot of candy, etc.
Chocolates and the sex. Yeah.
However, that doesn't necessarily is general. So you do have FESCO stations that have supermarkets, that have fast food restaurants, tasties attached to them, that have money transfer businesses. So again, that's part of the success story of FESCO. A lot of our stations are destination stations. They can actually go there and do multiple services.
Yeah.
So those stations, typically the revenue mix for them, I won't get into the details, and the profit mix for them.
And they're not in your financials fully
Correct,
disclosed.
they're not in my financials at all, because we only sell fuel to those stations, and the only station we run as a retail outlet is the one on Beechwood Avenue.
Got it.
So our model is to sell fuel on, and those dealers sell it on to the public.
Got it. We're gonna come back to that point. Great point, Jeremy. We take another break on Business Live Extra. More when we return. Welcome back to Business Live Extra. FESCO delivered superb first quarter numbers, with revenue hitting 6.45 billion versus 1.9 billion Jamaican dollars, increasing more than threefold year over year. FESCO's net profit likewise increased by 287% to end the quarter June 30th, 2022 at 151.7 million versus 39.9 million year over year. To note, FESCO in the first quarter has already delivered more than one half of the entire annual profit it delivered in its previous fiscal year. For the concluded audited period, March 31st of this year, 2022, FESCO registered net profit of Jamaican 253.6 million. We speak to Jeremy Barnes, the Managing Director, about what has been contributing to this significant growth in revenues and profitability at FESCO. Jeremy, just touching back on the whole FYC marts.
Right.
So, how many convenience stores or marts are there throughout that 17, gas station network?
Roughly about 13 or 14.
Okay.
And FESCO typically distributes FYC water, that's our branded water, Future oil, lubricants which are API certified. They are certified internationally.
Okay.
And a lot of people appreciate that there are many oils out there in the market that aren't actually certified.
Are you vertically integrated, or do you kind of more, like, say, white label? You outsource to other manufacturers?
White label.
Okay. Overall.
Yeah.
No, that's interesting overall.
Yeah.
And so is that do you plan to open up those convenience stores at the other, let's say, remaining 4 locations, or?
They have convenience stores, or the space doesn't really allow for a big convenience store, but they still distribute our products, our water, our oils, and our chemicals and lubricants, which include windscreen wash and coolants under the Future Lube brand.
Okay. Yeah, that's good.
So all 17 stations carry our products. Yeah.
When you were going public, what was interesting is you gave us a lot of data. So you actually had like the volumes in the prospectus, or a couple of the quarterly results. And I noticed in the quarter that you just came out with, you have the petrojam pricing and how that's going, but you haven't been putting the volumes anymore. Was that kind of like, the board of directors, or even you saying, let's not give our competitors too much information on our volumes?
Correct. So absolutely. I think it was for the second quarter.
You got away with that with the business journalists and the analysts out there.
Right. So I think for the first quarter last year, we did share the information. And by the second quarter, the board of directors sat down and said, you know what?
They could work with your market share.
Being the only listed company is putting us at a disadvantage, and if we were to continue disclosing a lot of this information, because we are growing, and some of this information is a little bit too oversharing.
Yes.
Because your competitors have that data, and they don't have to share their data with you. So it's for competitive reasons. What I can and will say is that every quarter our volumes have been growing.
Yes. And I was going to say that on an absolute basis, or let's say just a real nominal basis, when you adjust for that whole oil price or petrojam price, would you say FESCO is growing?
Absolutely.
Okay.
Tremendously, actually. We're growing.
But your smile tells it all.
Yeah, we're growing on a liter basis, because that's how we measure fuel in liter barrels. We're growing every quarter. Same store sales in liters have been growing. So forget about the new stations. The existing stations have been growing themselves. And obviously with the addition of new stations, they bring additional liters to the market. So on the whole, the company is just growing.
And so before we really get into the nitty-gritty of the numbers, what do you attribute that to? I mean, you say you don't really market aggressively, but I mean, yes, of course, you have the brands on the canopies and the stations, but what do you really attribute that growth though? You know, why is I don't know, the driver or the consumer going to a FESCO versus whoever, Total,
Correct.
Texaco, you know?
So we saw it over from COVID, from 2020. Again, I think I spoke to the value proposition of a FESCO station that we have offer many services there. So even during COVID, our stores were doing better and better because people could come there and do one-stop shopping. They could come and get their groceries. They could come and get their patties, etc. They could have come and do money transfer, collect, you know, income in Western Union or MoneyGram, etc. And you know, many of our locations have all these services. Not necessarily the fast food, but they have the money services and they have the convenient shopping, including some supermarkets, especially in Old Harbor, Brayton. You have money transfer businesses in Rock Hall, Stony Hill, Mandeville. So across the network, the stations are attractive because people can do multiple transactions in one place. So we saw that momentum building from COVID, and it has continued through. In addition to that, being a listed company, we have a lot of customers that come in and say, hey, listen, man, I'm a shareholder, you know, and this is where I buy my gas. And so I think in the IPO, we got about 4,500 shareholders, and I think those shareholders
are supporting
the business. And beyond that, I think
it's interesting you say that because there's a lot of times, I mean, they're not jokes, they're just comments that say, look, every time you fill up your gas, if you can afford it, just spend the same amount and buy the shares that same month, you know?
Correct. So there's a lot of that going on. And again,
so there's very positive public sentiment.
There's very positive public sentiment. I think even the ferry station, again, you know, the Corus family built that station, and that station is, you know, is one of those things in Jamaica that I strongly believe that if you come to Jamaica, you should go to Bob Marley Museum. You probably should go to Newcastle. You probably should go to, you know, but you must go to a FESCO, and you must go to at least FESCO.
Well, what's amazing is when you drive by Beachwood or that ferry station on Mandela, I mean, it's just always packed. It's just always rammed.
But you get through quickly. That's the experience, and you know, through.
Well, I went there one day, and what I found is what's different again is you have, you know, staff there who are branded, and they're running around even with the point of sale machines, and you just don't see that at other stations. So tell us even about your service proposition. I mean, how are you able to get your team members to do that? Because it reminds me a little bit about like even JMB with their kind of love theme, and there's a lot of great comments about, you know, their service model and how they've been able to achieve that compared to in their sector.
Right.
But it seems in your sector, you're able to deliver service.
Right. So again, we have long lines, and we love that. We'll absolutely love that, people, because that means you want our goods. But when you have the long lines, we want you able to get through quickly. So, and we have quite a few stations that have high volume. So what we've done is we've had traffic wardens, because people like to get through quickly, and they like order.
Right.
So even within what some people might think is chaos, there's order. So we have traffic wardens at the stations.
And when you say traffic wardens, those are persons with
persons in reflective vests that tells you which pump to go to get through quickly.
Okay.
So we do that at our high volume stations. In addition to that, we have supervisors outside, as you said, doing the point of sale. And in fact, point of sale transactions have been going up.
Yeah.
Since COVID, I realized that, you know, people are going.
And it just seems like common sense, because in almost every station they tell you, okay, but you have to go inside, get out your car. It's just not service driven.
Correct. And then even further, I was talking to you earlier about the technology at the station. So like at Beachwood Avenue, we have 2 terminals where we actually accept our own proprietary card. So you know, people that prepay for gas, and they don't have to go inside and run the card. You can come up, swipe the card at the pump, put in your PIN, access your fuel, and we can print receipts on the pump. Again, somebody don't have to go inside and get a book and write a receipt, or go inside to print a receipt. So we made all of those facilities available on the pump for you to get through quickly.
Okay.
At FESCO, we kind of have a kind of binary, is that it's done or not done. And I think that's our culture. So I think even every staff member has bought into that. So you will even have the bearer at times coming downstairs to assist or to help if there's a situation happening. You might find me on the pump a couple of times helping our, you know, meeting customers at Beachwood Avenue. So we do have a culture of getting things done.
And customers love that. There's nothing more special than seeing the owner come down once in a while.
So, and as I said, we just have a culture of getting it done. If you see something, if you see a piece of trash on the ground, pick it up. I mean, you don't call a janitor. You pick it up.
That's great.
And put it in the bin. And I think I think the whole staff loves it, and I think it just builds a team effort that we rely on each other.
You see now that goodwill coming out in the market cap.
Yeah.
We're going to come back to it, Jeremy.
Yeah.
That's great. We take another break on Business Live Extra. More with Managing Director Jeremy Barnes when we return.
Yeah.
Welcome back to Business Live Extra. FESCO recently raised a successful corporate note bond raise of $1 billion Jamaican dollars via its lead arranger and broker, NCB Capital Markets. The purpose stated was to continue to accelerate growth, working capital, grow the gas station network, and a significant announcement to enter the LPG space or market. Is there potential for other mergers and acquisitions, M&A on the horizon for FESCO, or regional expansion? We're back for a final time with Managing Director of FESCO, Mr. Jeremy Barnes. Jeremy, welcome back to BLE.
Thanks for having me again.
You've been doing great today.
Excellent.
And learning about FESCO and, as you said, the drops, you know,
Yes.
and the future. The profits. We get the revenue story, we get all the great stuff that's happening, you know, the service, the goodwill of the company and how things have been growing. But the profits, what's phenomenal, a lot of analysts out there say, you know, man, FESCO was a bit overvalued and, you know, the price to earnings ratio was high at blah, blah, blah. We won't go there too much.
Yeah.
You know, that's not really our job.
Yeah.
But, you know, at the end of the day, the growth, the profits, the first quarter has come out at more than half your entire previous year. So what is driving this significant, you know, growth of profitability as well?
I think we tried to signal to the market, I think late last year, that we're going through a doubling.
A what?
A doubling, as we call it.
Okay.
And
educate me on that one, though.
You're just doubling. You're just doubling your revenue, doubling your profits, and we're going through a doubling.
And when the, you know, I don't know, when the naysayer or the guy out there says, well, no man, oil has doubled as well, so FESCO just gonna benefit from oil price. Them not do nothing. How you explain this doubling?
All right. So again, the main numbers we look at FESCO is gross profits. Forget revenue, which is mostly a function of gas prices.
Okay.
We look at liters for sale and the margins, and profits, obviously. And when we say we're going through a doubling, we mean we're going through a doubling, talking about either liters and profits. And even in the prospectus, we said that we're only at about 4.5%, which is very small, and we're growing the network. And we know that we're growing, as again, I don't want to go too far, but we're doubling. And the growth hasn't completed as yet. It's not slowing down. We're
still in a trajectory.
Still in a trajectory. So if you look quarter over quarter, you see that there's, you know, some growth happening. What I would say is that, and you know, in talking to some of the analysts, what I did tell them, because I can't, you know, everything you express to somebody, you have to express to everybody.
Yes, yes.
So basically what I could share with them is that, yes, you might say the ratios, but I think we're growing into it. And I think IC Insider did their report yesterday, and you know, you can look at the PE or the EPS projected what they have for it, and you can actually see we're growing into the valuation quite nicely.
Listen, price earnings ratios can be totally misleading if somebody uses it static and doesn't look at your growth rate.
And don't look at the growth rate.
Correct, yeah.
So, and again, we like to keep things
simple.
Yeah. So it's my job is managing the business rather than managing the stock price.
Right. You're not here to be an investment banker.
Correct. So I'm managing the business. And I'm managing to get the company to be more profitable, investing all the capital we have in the most efficient and effective way.
So talking about new growth.
Right.
You raised $1 billion.
Correct.
Congratulations again.
Thank you very much.
You got the IPO money. NCB Capital Markets sticks with you. You get another $1 billion.
Correct.
How much has they, you know, been public? The credibility that comes with it. You know, you're out there in the business news as well. Has that helped you be able to access this additional $1 billion as well?
Absolutely, and it was easy to access. We have a great partner in NCB Capital Markets. They're confident in the business. They see the projections, they see the forecast, they look at the numbers and say, hey, look at the ratios. We're able to borrow the money with the existing returns that we're making and pay it back comfortably.
And there was a time in the business sector, like I would just look at you and say, I think you're a campionite, because I mean, everybody in the business world was a campionite, but it's good to see, you're actually a Wilmerian.
Proud Wilmerian, went to Wilmer's prep and Wilmer's boys, so I'm proud Wilmerian.
So you're doubling of Wilmer's.
Exactly. I mean, strangely enough, for quite a few Wilmerians within FESCO itself, not by design, is after the fact. People say, they went to Wilmers, like, wow,
but
interesting.
That's what I'm saying. Wilmers is emerging,
correct,
more and more in the business sector as well.
Correct. I think even our mentor, Lissant, is a Wilmerian.
Even
Vernon James is a Wilmerian.
Medical disposable supplies, Wilmerian.
Correct. Stephen Good. A lot of people are Wilmerian that,
So the public markets are seeing the benefit of this.
Absolutely.
It's great to see.
Yeah.
So on that point, on the $1 billion, and the critical point is LPG market.
Correct.
In terms of what you can tell us, so it's not just the gas station network anymore, but where do you see, the whole cooking gas market going? Is this a play where is it just big commercial, or is it going to, look, you're cooking some eggs in the morning, run out of gas, and I mean the first thing you have to do is get some more gas. Is that where this is going?
Absolutely.
Households?
Okay, electric stoves have been with us forever. When I was young, we had an electric stove, but people prefer to cook with gas.
It's cheaper, of course, cost effective, it's affordable.
It's a cost effective, and I think the performance when you're cooking is a little bit better.
Mm-hmm.
So people prefer to cook with gas. So whether it will be with us for 50.
So the brand is incredible. May we see little trucks on the road delivering some cooking gas branded FESCO? And the brand takes off even more?
Right, we haven't sold a liter yet, so I haven't sold 1 liter of LPG as yet. So we haven't entered the market.
Expectation of timeline this year, next year?
By Q1 next year, so by April.
Q1 calendar or Q1 of FESCO's year?
Q1 of FESCO's year, so by April next year.
Next year.
We should be doing cooking gas. What I would say is that for the $1 billion, and if you look at our balance sheet, you'll see we have about $1.5 billion in fixed assets.
Mm-hmm.
The cooking gas business is highly capital intensive. So
because of the cylinders, and
you have to have storage, filling, and then at each person's home you have to own. The company has to buy a storage facility for them, which is a cylinder.
Cylinder, right?
And again, logistics, manufacturing worldwide, everything is slow.
Right.
So it takes time to develop and build this business. So we've been investing, but we haven't been able to earn from it yet. And when, next year, hopefully, by April, we're starting to earn from that investment.
But you're on your way.
We're on our way, and as I said, we're planning. As I said, we're doing our due diligence in the market.
And tell me something. You're at 17 stations, right? I mean, are you finding? I know a lot of the other local owners have been gobbled up, like the Epping deal got done, a few other deals. Mm-hmm. Are there any other local stations, or do you find other maybe local players who are left, are coming to you, or is mergers and acquisitions, especially with, as you mentioned, NCB as your partner, they see a lot of deals. Are deals on the table? Are you seeing deals, Jeremy, that might entice you to give you even more growth, whether it's on the gas station network side or LPG side or just anything in your sector?
What I would say is nothing that we can disclose at this point in time.
Oh, no. But are you seeing stuff? Even if it's regionally as well?
Right. There are activities in the market where, we are exploring, potentials. But at this stage, it's way early to even,
So more organic growth is your focus? Organic
growth is our focus. It's the one that, again, generates the ROI for us. Again, our hurdle rate and our expectations of growth and profitability are high. So, we like organic growth.
And you have control over it?
We have control over it. It expresses what we believe. But at the same time, again, we have a lot of opportunities with people wanting to brand their station FESCO.
But you don't do that now?
Yes, we do.
You do?
Yeah, so if people, some dealers own their stations across the island, and there are a lot of people that own land that want to build stations.
But do you have any franchises now?
Well, that's what I'm saying. A lot of people are calling us, and we're in various developmental stages with these people.
Okay, so you are considering this, you're open to it?
We're open and executing that.
Oh, you are?
Yeah,
okay.
We're open and are executing that model. It's part of our model. So remember, most of our stations are owned by dealers. So either existing dealers or new dealers. So we do foster that, relationship where we do assist and give, expand
great.
the brand that way, yeah.
Yeah. Well, Jeremy, it's been a pleasure having you.
Thanks for the
I mean,
opportunity.
we really look at FESCO as definitely, I mean, it's phenomenal how the market, and the Jamaica Stock Exchange has received FESCO over the past 12 or so months.
And the customers, I mean, I'm really
Yes.
grateful to the customers, how they have received FESCO and how they, they share their opinions, they make comments, how we can improve, that they love the service. But I'm really just thankful for everybody out there.
And you made one of the most phenomenal comments. Shareholders, as I said, whatever that statistic is, shareholders who are customers and customers, shareholders. I mean, how else could you win more than that?
Correct.
That's
you spend some money and get it back in a dividend and a profits.
1.6 cents dividend coming up.
Exactly.
Buy FESCO.
Exactly. Come out, buy some more gas. I mean, it's summer still a little bit. Travel, enjoy Jamaica. There are so many things in Jamaica to be proud about and to be happy about. Enjoy the summer. Buy some gas from FESCO.
Thanks for joining us. Jeremy Barnes and FESCO, creating a win-win. Customers, shareholders. Thanks for joining us on Business Live Extra, Jeremy.
My pleasure. Thanks.
Great. That's it for another edition of Business Live Extra. Remember, natural gas is the future. We've been talking with Jeremy Barnes, Director and Chief Executive Officer of FESCO. Don't forget, you can watch us online at cvmtv.com/videos/Business Live Extra. Thanks for joining us.